Good morning, traders. Chris Buss here with Traders Profit Compass with another edition of Before the Bell, your home for actionable pre-market content. It is Wednesday, May 25th at 7:04 a.m. as I'm starting the video. Let's take a quick look at futures. Don't forget to run your player at 1.5x if you're new. Bitcoin up 1.4%, oil up 1.3%, equities pretty much flat. Gold off 0.75, nat gas up 1%. Over on the macro front today, we've got durable goods. That's always a good read on the economy. Oil inventories at 10:30. We've got a 5-year bond auction at 1, and then we've got the FOMC minutes at 2, which can always provide some fireworks, as we've discovered over the last few times. Over on the earnings front, this morning we've got Dick's Sporting Goods and Retail. We've also got the Canadian banks starting to report. After the bell, potential for fireworks, we've got NVIDIA, Snowflake, Splunk, Box, Williams-Sonoma. And then in the morning, tomorrow morning, we got Baba and Baidu. And then we've got a bunch of retailers. We've got Macy's, and then the dollar stores. We've got Dollar Tree and Dollar General. Those will be pretty interesting. So after the fireworks yesterday was Snap, lot of volatility, a lot of rips and dips. Not particularly easy to trade. But let's see how the charts panned out, and getting a little bit of a late start today, so I'm going to zoom along. Nothing's changed in the oscillators. I mean, when you don't have a trend, when you don't really have a direction, whipsaws almost every day, those oscillators aren't going to do much on the NYMO and the NAMO. So we really haven't made any progress in either direction as far as those indicators helping us gain an edge, if you will. Bitcoin is holding in there. Still have this bearish pennant. Bitcoin up 1.4% today. That's a good start to the day if you're long and trying to be bullish. It seems to be a leading indicator of kind of how the day is going to go. I have made a point of trying to look at that several times a day just for trend, almost like the VIX on the NASDAQ. If Bitcoin is rising, that's or at least green, that's a good sign for the NASDAQ. Moving on to SPY. We took a look below, and then they bought that up into the close. I thought it was interesting. They really didn't make a run at these prior lows. I mean, they broke it down a little bit. I think they undercut 390. What was the low? 387. So they undercut 390. They got it back above that, and they actually made a run at the gap up toward. Actually, they got in the original gap and got stonewalled at 395. I think the one of the important elements on this chart is, well, one, you got a gap from 395 to 397, which was the prior close on Monday, after we had that nice day on Monday. And then so a nice bullish move today would be to get up into this gap and fill it, and then break above 397. The next, if we were to get above that, of course we got 400 right there, kind of a psychological level. But more importantly, at 405, we've got the declining 20 and technical resistance at 405, and that'll be a really big hurdle. But look at the falling wedge, pretty well defined. A big line of lows here, and a well-defined downtrend line, creating that falling wedge. And so today, getting into that gap and filling it will do two things. Obviously, a move in the right direction, filling that gap is an important technical event, but we will have broken out of this wedge formation, and then that in itself can provide a catalyst for an up move. On the downside, I would it would definitely be a check mark for the bears if they could close it below 390. I'm still leaning to the bullish side, but this isn't an all-in moment. If you were sitting on the sidelines, I think on a breakout of this wedge and a fill of this gap and a break above 400, I think that would be. I think you should feel a little bit more emboldened at that point versus where we are right now. I think we're trading 393 in the pre-market, down just a little bit. So keep those elements in mind as you're trading today. Here on the hourly chart, just a little bit more resolution. The downtrend line on the hourly comes in at slightly different levels than what you'd see on the daily chart. So if you're trying to fine tune this thing, a break into the gap and then a break above this 397.50 will get you above the hourly downtrend line. You can see that on this undercut low here, we still have those bullish divergences in place, so that's a positive. But what you really got to see is a breakout above this downtrend line, and I think that would be a catalyst. Then you got 400 above, and you got 405 above, and then you've got a sizable gap from, let's call it 406.50 up to 411, and then this will be a tougher nut to crack if we get up there. That resistance zone from 411 up to 415 will be tougher to crack through. But let's see if we can pop that downtrend line this morning and get a little horsepower to the upside. Over on the Qs, they did their best to break it yesterday, but they didn't. I don't think we got down to this prior low. They did do some buying, towards the close, but they really did not approach that gap. I think getting above 290, just for starters, is going to be a positive move. We closed at 287. Let's look where that gap is. Yeah, we got a gap here from 289 to 293.50. Notice the elements on the chart. Lower low, higher low in momentum, higher lows in RSI. That's your bullish divergence. You've got this pretty well-defined downtrend line coming in, bisecting the gap, which may pose a little resistance. Come up in here, hesitate inside the gap while it contends with that downtrend line, and then hopefully fill that gap and then break above 293.50 and then break out. And then your upside targets would be 297.50, and then you've got another gap up at 302. So you've got the wedge, but not quite as tight as the one on SPY that we just looked at. On the downside, I would really like to hold yesterday's low at 282.25, and if you break 280, all bets are off. We would probably head, lower at that point if we were to lose that. But given yesterday's action, I mean, very much catalyst driven with all that snap going on and taking Google down 7% and, whacking tech across the board. The only thing I could see just from a catalyst standpoint today is those FOMC minutes at 2 o'clock. That could be a positive or a negative. And then you got NVIDIA after the bell, and if they come out with some, doomsday earnings report, we'd probably have some fireworks after the bell, especially in the semis. So anyways, I'm hoping for a breakout into this gap area and get a gap fill and drive higher today. IWM down 1.5%. Took a look down to the prior low right here at, what was the low? Yeah, 172.33. Let's call it 172.50 right here at this prior low. I would have that marked on your chart just as a, you really don't want to break below that, or you're going to be coming down here to 170 for another try at breaking that low. We do have a sizable gap down here that still has yet to be filled. Let's get some detail on the hourly chart. We've got another wedge type situation building here. We got the prior low, and then we actually had a double bottom low right here from yesterday where it tested the lows from the other day, successfully did that. And if you notice here on the PPO and RSI profiles, we got a low here with PPO here and RSI here, and then we came down to meet that low, but with higher lows on the indicators. So just even that little double low had, that little double bottom had bullish divergence. So that is a good sign. Today, got to break above 176, got to get into the gap at 177 and fill it up to 178.50. I think if it accomplished that and broke above, then you could get some horsepower to the upside, possibly up to fill this gap up towards 183. So you've got a downtrend line here, and you've got this triangle. It's, hopefully going to resolve to the upside. Could be some more chop today. We'll have to wait and see. But I think the key levels for you today are 176. That's right where the downtrend line comes in and lateral resistance comes in. You get a break above that, that would be a check mark for the bulls, and then have your gap marked, certainly for a gap fill. On the low side, I'd have that 172.50 marked for a potential breakdown. On Facebook, this is the bracket trade setup. We had the initial breakdown, and then they did some buying in the afternoon, brought it kind of right up back near the open. So you've got a gap here from 183.68 to 196 for your long, and then you've got down here, if we were to break the low at 176.11, I think it would come back down here pretty quick and test this prior low at 172.50. And although I don't have it marked here, remember you've got a trading range here from between 183.68 and 176. So if today they make a little run at the gap and stall, and you see, the rest of the Fat Man complex and the Qs stall, and you get a sense that, this thing is going to roll over, then your objective place to short is right against the bottom of the gap here. And then, if you get close, or anywhere in here, depending on your risk tolerance, if you get kind of close to that and you sense that stall, you can be short against the bottom of the gap. And what you'd be playing for is a move back down towards 176. So just realize that depending on how active you want to be during the day, you can try to play this this trading range here, which is $7 wide. So you can make hay on a $7 wide trading range, especially if you're just trying to do something intraday and then you get a move. But if you're a longer term trader, you can just alarm the bottom of the gap and alarm the bottom of the trading range, and then you can follow price when it breaks out or breaks down from the original yesterday's range. Apple came down to that 138 level, came back up to 140. I think 140 is your line. If you wanted to add a degree of, a degree of safety, or however you want to think about it, you've got a downtrend line on the 60-minute chart. What you could do is, wait for a confirmed breakout above that level, say at 141, and then hope for a gap fill up to 143, and then a move to 144. I'm still long. I'm in June. What am I in? I'm in June 3rd. I got some 141s and some 144s. So I'm hoping for a breakout here and a move, at least up to 144, and to, break higher. Tesla, bad day at the office, another 7%. Lost this 645 line. We've got a sizable gap now above. What I did is try to drop in some channel lines that look close. I think I've got it here. So, if we fall further, it'll at least give you a reference point of where there may be a bounce down here towards 600. But on the bullish side, you got to get back up above 645, or, it's really nothing. That would just be a back touch. And if you got a sense that that's all it was, then you get another bite at the apple on the short side to be short against 645 for a try on the short side. Just want to show you the daily chart as well. I drew a kind of a downtrend line capturing all these lows, which brings it in here around, depending on when it would get there, 600, 575. But you can see we've wiped out a lot of trading. I mean, I'd have to back the chart up to find these levels down here, and I will. But obviously in a really steep downtrend. And one of the things that you can do, I mean, there will be a kickback rally. Things don't go, down forever. But notice how far away we are from simply the 8 EMA downtrend line. And so what you could see, and this would be a perfect scenario of that, come up here, fill the gap, make a little run back up to 700, hit that 8 EMA downtrend line, and then roll right back over. But we've got the full bearish stack on EMAs, and that's never a good thing if you're trying to be long. And I mean, just from the chart, you don't want to be trying to pick a bottom here if you're if you're a swing trader kind of thing. It's going to go lower. It's just a matter of where a kickback rally starts and where it ends before it rolls back over again. Of course, the wild card out there on Tesla is if Elon tweets out at 10 o'clock this morning, hey, I'm throwing in the towel on Twitter. I don't know what I was thinking. He's not going to say I don't know what I was thinking, but it's just not worth the hassle, and they're not going to give me a better deal, so I'm out. You'd probably see a moon bar type response to that. So I'm sure the Twitter thing is dragging on it. How much? I have no idea. Microsoft actually did a nice job yesterday, outperforming, only down 0.4%. I'm still long. I've got June 3rd 260s. So had our pullback in the morning and then steadily climbed all day. It's all about 261. You can see the prior highs. That was a sticking point back here, resistance. So it really needs to pop once 261, and then I think it would have an open path up towards 264-ish, and then 267-ish on the upside. One of the stronger charts in the FATMAAN complex. Amazon had the 3% gap down and just stayed there the rest of the day. So I've got the gap marked for you, and you can notice that the lows, this consolidation area, lines up pretty well with this spike low right here. So really, you take that line across, you're right at 2050. You break below 2050 and hold it for any appreciable amount of time, then that opens up the more downside. I'd have to go back on this graph. Actually, let's look at the weeklies. That'll give you a good idea. See, we came down and filled this little gap, and this just goes to show you that no matter how inconsequential a gap may look or seem, it's nice to keep track of them, because lo and behold, when we were up at 3,600, why is Chris keeping track of this stupid gap from 2 years ago that's $25 wide on a $2,000, $3,000 stock? Well, because gaps get filled. It may take 2 years or may take 5 years, but you're not going to find many charts where you say, wow, that gap never got filled. They fill at a certain point, and now so Amazon has made a complete round trip back to the pre-COVID levels. Now, what you got to be concerned about here is, remember what we always talk about, you do not want to go into this pre-COVID zone, because what would happen is, say we get a bounce here and then come back in. Once you re-enter that zone from above after being outside for 2 years, then that opens up the downside of this trading area. And you can see there was a lot of support in here at, let's just call it 1750. And then you got your COVID low down at 1500. So, actually 1600, beg my pardon. COVID lows 1607. So at this juncture in the market, don't take anything off the table, like it'll never go there kind of thoughts, because it definitely can. Google, bad day at the office. I do not know why I had updated this chart and it didn't save it. Let's see if we can just pick off the levels here. The bottom of the gap is 21.25. The top of the gap is 22.30. And then you got your low at 20.38 down here. So that sets up your bracket trade on those levels for Google. Obviously wrapped up in the digital ad spend fiasco from Snap. We'll have to see if that just is the catalyst for another leg down, or they can rally it and fill that gap. So, I mean, you've got a, what do you got? Trying to look here. I mean, it doesn't look like it, but that gap's $100. So if you can catch that, I mean, obviously that would be a really nice trade, especially if they can do it quickly. Netflix just kind of toggling in this area. I think you got to get over 187.50 for the upside. On the downside, you've got a support line at 170. Kind of in no man's land here. I really have not been messing with it. That doesn't mean you shouldn't mess with it, but those are the key levels for any kind of a sustained move. 170 and 187. Semis, gap down. You've got a gap between 227 and 230. You can tell here that yesterday, after the gap down, spent the rest of the day right here along that line of 223. And you've got a rising trend line here, a declining trend line here, forming that triangle. You could be long against 223 if things looked bullish. Look for a breakout there and then a gap fill. You lose 223 though, probably going to come down to 220 at a minimum to test this prior low, and then you'd be below this triangle formation. Then you got to really watch out for a break of 220 to come down to this 216 to test these prior lows. But I will say this, with all the selling pressure yesterday, notice how well semis held that line there. I mean, they spent the whole day trying to break that 223. They couldn't do it. What I would imagine is with NVIDIA after the bell, even if there's not big buying pressure today, I think that they'll hold the line there today and wait to see what NVIDIA does. And then, that'll be a significant referendum on semis, I would imagine. And then you'd get a move after the bell on that. Quick spin through ARC. Basically what happened is we filled all the gaps below. I've taken the gap out, but remember we had this 1750 alarmed. There was this gap down to 1650, and so here we are. If you got that, great. If not, now your pivot is 1650. You break below 1650, you're going to drop down to 1525. Test this prior low area. If it can hold it, your objective is 1750 back up to the top of the range. And if you can get a breakout there, then 1950. Genomics held in there pretty well. It held the bottom of its trading range here at 31. So you've got a very objective line there. You break above, then you'd be shooting for 33, 32.75. If it holds below, we've got a little gap down here that I just noticed that I didn't mark, but your objective on a breakdown below would be testing these prior lows at 28. ARK-K, bad day at the office, 7%. Filled this gap. Remember we had a gap from 41 to 39. Filled that to the penny. So now your pivot point is at 39. Below 39 opens the door to 37 to test the prior lows. As long as it can hold it, if we get some bullish action, your first target is 41 and your second target is 43. And then wrapping up with ARK-W, again, filled this gap, came right back up to it. Your pivot point is 50, spot 50, 50 and a half. Above, you're shooting for 53. Below, you're shooting for 47. So those are some pretty clean lines on ARK across the board. Elsewhere in the market, oil and energy are holding up really, really well. XLE was green yesterday. I believe nat gas closed green. Oil was green with up 1.3% this morning. Valero has been hanging in there. I mean, we've got June 3rd, 125 calls. They're underwater, but it keeps making runs at 125. Maybe I run out of time, maybe I don't, but the energy complex as a whole is holding up really, really well. Even in the lowest of the lows yesterday, energy was only down, 1.5% versus, 2.5%, 3% on the broad averages at the lows. And then once the turn happened, then they were able to take energy positive. So the energy complex remains bullish in my view. So let's watch those FOMC minutes this afternoon. If you're sitting on a fat gain, you may want to, if you want to stay bullish, at least take that win off the table ahead of those minutes and play it safe. Make sure you get something in the bank in case there's, downside fireworks. really anybody's ball game right now. When I say I'm playing for a bounce, that's all it is. Still bearish on the market. I just don't think at this juncture you want to be betting on the end of the world after we've, tested those lows with the positive divergences in place. Those bullish falling wedges that I pointed out. We've got month-end buying through at least the end of the week. And then as we head into the weekend, we'll decide, we may decide in 15 minutes if the thing falls apart that it didn't work. But assuming that we can get some upside follow-through, then we'll have to decide what we want to carry through the holiday weekend and into next week. Also keeping in mind that QT starts next week, June 1st, next Wednesday, I believe that is. So that'll be something new to the markets and certainly a headwind. And then we've got the FOMC next meeting. I think it's around June 15th. So they'll be, I'm sure, bumping rates another 50 bips. So keep your wits about you. Really volatile out there. Trade a little smaller so you can keep your head about you. Stay calm. If you feel yourself getting, knocked off center and a little unstable, take a 15-minute break, recompose yourself, come back, focus on the levels, not on the money, and I think you'll do just fine. So let's wrap it up there. If you're new to the channel, thanks for the time. If you like the analysis, hit the subscribe button, the alarm bell, the thumbs up, jump over in the show notes, find the link to drop in your email address. Then you'll get all this stuff morning, noon, and night right to your email box. We'd love to have you. So this has been Chris Buss with Traders Profit Compass. Talk to you next time.